Good evening, everybody. Thank you very much for joining in. This is 70th in the series where we're going to speak about a topic in technical analysis which is known as relative strength index, which is nothing but a momentum oscillator or an oscillator. Well, from this side, I'm Rahul Magan, working as a group corporate treasurer in EXL Services India, which is an Indian counterpart of a US Nasdaq listed firm EXL Service Holding INC. Besides that, I am a faculty member for various institutions in India as well as at Singapore level, and also I have my own book which is Options for Risk-Free Portfolio at New York, and second book which is Techniques to Hedge Your Interest Rate Exposure, which is scheduled to publish in Sydney by December 2015. You're most welcome to join my 62 million LinkedIn networking at rahulmagan8@gmail.com. You're welcome to see my videos on YouTube. You're welcome to join my Facebook networking also, and also welcome to join my WhatsApp group. I'm running three WhatsApp group covering foreign exchange. And I'm again reiterating the fact that today we're going to speak about a topic which is known as relative strength index in technical analysis. But before that, I would like to give a demarcation here in this video that there are various type of corporate treasurers we do have. Well, I am a kind of corporate treasurer who believes in fundamental analysis than in technical analysis. There are various kind of corporate treasurers who tend to believe in technical analysis than fundamental analysis. So you have various kinds of, and there would be example. I am a kind of corporate treasurer who believe in 80% fundamental and 20% technical. You can have other kind of corporate treasurers who would believe 80% technical and 20% fundamental. You may have a kind of corporate treasurer who would tend to believe that 100% fundamental and 20% and 0% technical, and you may have generally you would find that who would believe 100% technical and 0% fundamental. So in that regards, there are various kind of corporate treasurers, and today we're going to speak about a topic which is relative strength index. Now, what do you mean by relative strength index? Relative strength index is basically a momentum oscillator. What do you mean by an oscillator? Oscillator means something which moves from its own price. So today, if you have a price X, it will go to X1. If you have a price Y, it will go to Y1, and then so on and so forth, which moves around its own price. And momentum oscillator, as the word defined, which is momentum in nature. Basically, once you have a momentum could be drift up or drift down. Take a very simple example. If you have a curve, say any curve, take a very simple example, suppose USD INR, which is a currency pair. So you have a curve like that. Now if this curve is going up, then you would have drift up, and if this curve example is here and it is going down, then you have drift down. And if this curve is going flat, then you have a flat. And if this curve is going like that, example, then this is known as mean reverting. Mean reverting refers to a technique in which something would reverts to its mean. So if something is going up, would have to come down. Something which come down would have to go on up. This is known as mean reverting. Now one like this part where it is going up, or this part where it is going down, then it is going up, going down. Then this part is known as volatility clustering. These few things which we need to understand very carefully, like you should have a drift up, you should have a drift. What do you mean by drift up? You should know what do you mean by drift down. You should know what do you mean by volatility clustering. You should know what do you mean by mean reverting. You should know what do you mean by prolonged mean reverting. Prolonged mean reverting means it has taken a lot of time to move up, and it has taken a very little time to move down. Then it has taken a same time to move up, then same time to move down. This is equal mean reverting. So mean reverting would be again divided into two parts, which is prolonged mean reverting, and another is simple mean reverting. That is, relative strength index, as the word said, is a momentum oscillator, as simple as that. Now relative strength index would have two legs. One leg which is known as overbought, and one is known as oversold. Now the person who has developed relative strength index, as per him, overbought means 30 and oversold means 70, oversold means 30. So and there are the various formulas of relative strength index as well, that we are going to cover in the second video. But first we need to understand what do you mean by overbought signal, what do you mean by oversold signal. The person who created relative strength index, he tend to believe that if the formula of relative strength index is giving you a number which is 70, it means you are oversold. Take a very simple example. He tends to believe that if this is a curve and this is where it is 70, this is where it is 30, so he wants to say this is overbought, and here if it is 30, he tends to believe that this is oversold. Now overbought tends to believe that if you are here at 70, which is overbought, which means you should sell. It means here, example, if it is 70 here like this, then you should sell. It means it is overbought. It means there is some euphoria in the market, some news in the market, some momentum in the market, which is forcing people to buy. So take a very simple example. If USD INR, a very simple example, if USD INR, which is trading at 62, and there is some euphoria in the market which take it to say 67, then it would be at 70. So it means overbought. It means people are buying, then you should sell. You should immediately sell. It means 67 is a good level. Or take a very simple example, other way around, USD INR at 62, people are selling, and it goes to 56. It means it is overbought. It is oversold. It means from here you should buy. But as a corporate treasurer, one thing which you need to understand, the difference between overbought and oversold. It is a very personality specific kind of thing. Now, two things which we should know from when it comes to overbought and oversold, and especially in the relative strength index, which is that what do you mean by stop loss and what do you mean by trailing stop loss. Take a very simple example. USD INR was trading at 62, it has moved to 67. It means there is a shift of 5 rupee. Your relative strength index will tell you that this is a level when you should buy. Basically you should sell. Now a trader, there are two kind of trader. One kind of trader who tend to believe that no, this is not a level to sell, because the stop loss position which I am taking a stop loss position at a higher side. So for me, the stop loss position is not 62, it's not 67, I think it is 67.50. So when it will touch 67.50, then I will start selling. I will not start selling at 67. Here comes the fundamental, because none of the technical analysis technique would tell you what is the fundamental behind that. Technical analysis techniques will tell you that if it is going up, it means it has crossed 70 reason, so means you should sell that. Or if it is going down, it has crossed 30 reason, it means you should buy that. But the people who are aware about the fundamentals, they are very much aware about the fact that no, it has rise from 62 to 67, which means an increase of 5 rupee. So technically speaking, we should not sell at that level. We should wait for 67.50, and if it touch 67.50, then we would be selling that. Or take it alternate way. If it would touch 68, then we would start selling that. These are the few things that we should take into consideration before buying and before selling. So we should know what do you mean by stop loss. Other thing which we should know is trailing stop loss. Trailing stop loss refers to a fact that, example, you start selling at 67.50 and you are keeping a stop, it is turning out to be 67, you are keeping a stop loss that my stop loss is say 66.50. So if it go below 66.50, I will start selling. Trailing stop loss means, one example, if it is 66.50, I will start selling. Now another trailing stop loss would be 66, another would be 65.50, and so on and so forth. So I have to take a $1 million position. When INR would touch 67, I will sell 500k. However, I will wait that it will go to 67.50. Suppose it is going to 66.50, I will further execute 300k. However, my intent would again be 67.50. If it touches 66, then I would sell 200k. This is trailing stop loss from an export side. From an import side, if I need to buy $1 million, then I will wait. Example, it is 67. I will wait, it will come down. Suppose it is not coming down, so my first stop loss would be 67.50. If it touches 67.50, I will buy 500k. my wish to go to 66. However, if it going to 68, I will further buy 300k. If it again going to 68.50, I would be buying the 200k, because market is going up. I cannot wait indefinitely. So oversold and overbought, these are the two techniques which you will find in your newspapers, magazines, and the books. But unfortunately, one thing which we need to understand is that overbought and oversold signals should be linked with one concept, which is known as your stop loss and trailing stop loss. So as a corporate treasurer, if you are using relative strength index, and if the relative strength index is telling you that basically you are at 70, which means overbought signal, or you should sell, or 30, which means oversold signal, or you should buy, then one thing which you need to very much clear, that what is your stop loss position and what is your trailing stop loss position. That is something which you very well need to aware. And anyways, even if you are not using so-called relative strength index and the other techniques which we are going to discuss in upcoming videos like MACD, Bollinger Band and oscillators and all, your stop loss and trailing stop loss matters a lot. So with this, I would like to conclude the video, and you are most welcome to contact me at, which is 919899242978. You are welcome to email me at rahulmagan8@gmail.com. Thank you very much. In the upcoming videos, we would have several techniques to be shared on technical analysis. We would discuss the formula of relative strength index. We would discuss MACD, Bollinger Bands, your so-called oscillators, and your alloyed waves, your Fibonacci and all. Thank you very much. Thanks for your time.